Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Darshan Mehta. You're watching Indian Open.
Hi everyone, and I'm Navneet Saluja D'Souza. Well, first the headlines. The 17th Lok Sabha will convene for the first time today. Nirmala Sitharaman's first budget and triple talaq bill are just two of the many crucial bills listed on the agenda in this session. India's trade deficit widens for the third straight month, with exports languishing as US-China trade war weighs on sentiment. Reliance Infra reported its biggest ever quarterly loss after booking one-time hits and impairments worth 8,500 crore. And India beat Pakistan convincingly in rain-affected game at Manchester last night.
Okay, let's take a look at the trade setup for the day. If you're looking at firstly the Nifty and the Bank Nifty, the close on Friday was not the most encouraging, pretty much ended near the day's low. So there was enough weakness that was seen. The Nifty banked down almost 370 points and the Nifty was down close to 100 points. So that weakness was clearly indicated as far as our markets are concerned. Obviously, the trade war issues and the concerns are being raised. India has imposed retaliatory tariffs on 28 products on the US, and that is something that spooked the market. If you're looking at it, while the Nifty was down 100 points, the broader market pain over the past few months has been clearly there. If you're looking at the weakness, out of the Nifty 500, 25 stocks are trading at 52-week low. It's not the number, it's the quality of companies that are at 52-week low. Look at the companies, look at companies like Biocon, Oracle Finance, which is always supposed to be the safest bet as far as the IT is concerned, Glenmark, CED, companies like Lakshmi Machine Works, which is supposed to be extremely safe stocks. All these companies are coming to 52-week low, all these stocks. So that is a big concern. Weakness among the F&O stocks. So if you take a look at the statistics, out of the 197 F&O stocks, 165 on Friday ended with losses. So you could see the weakness that was there in the markets. Even commodities, crude is up for the third straight session, while base metals are trading weak across on the LME at the ended week, and in China also they are trading weak. Which are the important stocks that we need to watch out for? For one, Jet will be in focus. It was down heavily over the past few days. It was down 11%. But the Economic Times report does indicate that the lenders will meet today to finalize the resolution plan. So this stock, for one, will be in focus. Remember, it's not in the F&O ban as of now. The other one is Reliance Infra. Now, the loss was extremely high, a 3,300 crore loss, but that was on account of impairments in Reliance Naval and Reliance Power. Operationally, the numbers were decent. They showed a big growth as far as top line is concerned. The EBITDA margins are from a single digit are up to 22%. No doubt the auditors has raised some concern on the group companies, but a similar concern was seen in Reliance Power. So this could go either way. But remember, Reliance Power Infra trades in the F&O ban. The other one is watch out for counters like Indiabulls Housing Finance and Dewan, given the fact that the stock prices have corrected and a lot of concerns. They have now started telling the markets whether they have paid the interest and the principal dues on the NCD. So this is becoming a regular affair. NDTV, for one, will be down in today's trade. It's been trading weak, but Pranay Roy and Radhika Roy are barred from accessing the capital markets according to the judgment from SEBI, and they have been asked to step down from the key positions because of earlier issues that were there. Reliance Industries probably will in focus. Interesting report that's coming on from JPMorgan. They maintained a neutral price with a neutral rating with a target price of 1,300, but they say that the refining and petchem environment remains weak for the company and downside risk if the GRM and oil do not recover sharply. We'll cover this in more details on First Word. Open offer for Mindtree by L&T begins today and ends on the 28th. So Mindtree 980 is the price at which they are buying. And couple of stocks in the F&O ban, Reliance Capital and Reliance Infra remain in the F&O ban. The new entrant this time around is PC Jewelers. So these are some of the important stocks that we need to watch out today.
Okay, that's the trade setup for the day, but we'll also be taking cues globally this week as the global interest rates have peaked. At least that's what the investor community seems to believe, as more central banks across the world are set to meet during the course of the week. Will the Fed cut interest rates? Will the Bank of England continue with its monetary stimulus? Bloomberg's Adam Haig tells us what to expect.
it suggests that the Fed is going to have to come up with some language, whether it be in the press conference this week on the back of the policy decision or in the subsequent weeks, is around the fact that the market's already very much positioned for significantly looser policy. I mean, if you hit GTV Go on your Bloomberg terminal, you can get access to this chart, which shows you just how much of a move there's been especially in the last 3 or 4 months. And it really is baked into the idea now that without easing from the Fed, you're going to have a serious backup in yields. So really at the start of the week, which is not just going to be defined by the Federal Reserve, but of course Bank of Japan is very much in play with their meeting this week as well. It does speak to a sense now with global investors that have used the bond rally to really get into a little bit more safe haven kind of exposure, that if central banks don't come out with a dovish feel as much as some people are expecting, you could see some fairly pronounced moves in bonds to retrace some of that move.
All right, and on First Watch today, another Anil Ambani Group company has the auditors' concerns. Soumit Sarkar will join us with the company's financials. JPMorgan warns that cooling crude prices may spell trouble for Reliance Industries. Darshan will take us through the rationale. And specialty chemical makers are making the most of a sharp bump in demand, but Yash Upadhyay will tell us why the chair is limited to just the biggest 4 players in the market.
Okay, the big one was Reliance Infra. Finally, after weeks and weeks, they've reported the number, and they reported its biggest ever loss of 3,300 crores in the fourth quarter of the last fiscal. The Anil Ambani-owned firm booked impairment and write-off worth 8,500 crores against the investment in its subsidiaries. Soumit Sarkar is standing by with the key highlights. Soumit, let's start with first the numbers and the impairment, what all exactly the exceptions were, and then we'll move on to what the auditor said. But let's first focus on how the numbers were operationally and what caused this loss, what were the other ancillary items.
So if you see, though the company has reported a loss of close to 3,300 crore rupees, the numbers were actually not bad operationally. If you see the company's revenue, they were higher by nearly 30% compared to last year to close to 4,000 crore rupees. The company's EBITDA increased by nearly 3 times to close to 900 crore rupees. The company's EBITDA margins expanded to 22.1%, but it was that exceptional loss of close to 8,500 crore rupees which impacted the bottom line of the company in the fourth quarter of financial year 2019. Now, if you see, despite this exceptional loss of 8,500 crore rupees, the company's net loss was low at close to 3,300 crore rupees, and that was because the company had adjusted most of this exceptional loss against reserves and against the reserves. So that's the reason your net loss was low at close to 3,300 crore rupees. So what was this exceptional loss in the fourth quarter? The company took write-off against 2 of its associate companies, that is Reliance Naval and Reliance Power. Along with that, the company also booked a loss of close to 1,700 crore rupees due to loss on sale of investments as the pledged shares were sold by the trustees. So that's the reason this 8,500 crore rupees of exceptional loss came in the books of the company. On the balance sheet side, if you see, the company's net worth reduced by nearly 37% to close to 15,900 crore rupees, and that was because of this exceptional loss that the company saw in its fourth quarter. While at the end of financial year 2019, the company's current liabilities were higher by nearly 16,050 crore rupees compared to its current asset. What it means is that in the short term, the company might face issues when it comes to clearing, when it comes to repaying that debt, which is long-term and short-term. So that issue might come in for the company because their current liabilities are 16,000 crore rupees higher compared to its current assets in the end of financial year 2019.
That's about the numbers, Soumi, but I believe the auditors too have flagged off some concerns with regard to financials, the same way what we've seen in the past with the subsidiaries. Well,
yes, it had come in from Reliance Power also. Now for Reliance Infrastructure also, the auditors have raised various concerns. Now firstly, the auditor raised concerns regarding one of the companies in which Reliance Infra has investments and has to recover nearly 7,100 crore rupees. About this 7,100 crore, the company has also given guarantees worth 1,800 crore rupees to this party. Now, the auditor was unable to obtain sufficient and appropriate audit evidence about the relationship of this company with Reliance Infra and the reason behind these transactions, and because of which it was unable to determine the impact of this that could arise in future for Reliance Infra. So that was one of the concerns. Now, the company is saying that they own less than 2% stake in this company, and this company is a Reliance Group supported company. Now, the second concern was on Reliance Power. Now, Reliance Infra's associate company, that is Reliance Power, chose a different depreciation method which did not comply with the accounting standards. So that was one of the concerns that was highlighted in Reliance Power's books also. So similar concern has come in Reliance Infra's book. Secondly, Reliance Infra, which not only owns close to 33% stake in Reliance Power, for which it has made investments worth 5,757 crore rupees, but it has also receivables worth 1,400 crore rupees from this company. Now, if we see the current market capitalization of Reliance Power, the value of this 33% stake of Reliance Infra is only 500 crore rupees, and the auditors of Reliance Power have also raised doubt on Reliance on the company's ability to continue as a going concern. Now, despite these two facts, Reliance Infra has booked an impairment loss of only 287 crore rupees when it comes to Reliance Power. So if you see, the value of the investment has come down to 500 crore rupees, and they had invested close to 5,700 crore rupees. Plus, there is this 1,400 crore rupees of receivables, for which there's a doubt whether the company might be able to repay this or not. But still, Reliance Infra has taken a very low impairment of only 287 crore rupees. So that was another concern that auditor pointed out. Lastly, there was various concerns on the subsidiaries and the associate companies of the Reliance Infra. Now, auditors have raised concerns on nearly 11 subsidiaries and associate companies' ability to continue as a going concern. Now, because of this, the auditor also say that a material uncertainty exists that may cast a significant doubt on Reliance Infra's ability to continue as a going concern when it comes to the consolidated Reliance Infra company. However, the company is confident, that is Reliance Infra is confident that it will be able to meet its debt obligations by on the back of the various initiatives that the company has taken, and it will be also able to discharge all its liabilities. Also, regarding one of the subsidiaries that auditor pointed out in its note was that the KM Toll Road that the subsidiary of wholly owned subsidiary of Reliance Infra. Now, NHAI has terminated its agreement with this subsidiary, because of which all the operations of this subsidiaries have ceased to continue. However, the company has not provided any impairment on the value of the assets that the KM Toll Road project owns. Now, at the end of financial year 2018, if you see, the subsidiary had total assets worth 1,627 crore rupees, but the company, but the Reliance Infra has not provided for this assets because they believe that they will be able to recover all these investments from NHAI in future, and that's the reason they haven't provided for this asset so far.
Okay, just Samit, a quick follow-up. Are these auditor? It always looks serious, but if once you go through the auditor comments, according to you, does it look very serious in what? Because for Reliance Power, they had said, okay, these two companies are in deep trouble, the two subsidiaries. Are you finding these very concerning?
So for Reliance Power and the subsidiaries issue, it's not big of a concern, because everyone knew that the subsidiaries are under debt resolution and they are not in a state to pay that debt. But that one first auditor note that was on that one party, which is a Reliance Group company, to which they have from which they have to recover nearly 7,100 crore rupees, plus they have given guarantees of close to 1,800 crore rupees. So that might turn out to be a bigger concern, because the amount is close to 9,000 crore rupees that the company owes from that one company that we do not know which that company is. But what Reliance Infra is saying, that they only own 2% stake, but it is still a Reliance Group supported company. So it could be a related party transaction for which no details have come in from both the auditor's side and from Reliance Infra side. So that is the only bigger concern that I could see from the auditor's note that came out on Saturday.
Okay, thanks, Samit. And just hold on, the next piece, I think you might also be interested in what he tracks that closely. Navneet.
Yep, and let's move on. The next piece is on the cooling crude prices, which may spell trouble for Reliance Industries, says JPMorgan. In fact, the global brokerage house says GEO may provide some cushion, but that's subject to price hikes, which look unlikely. And Darshan, what else exactly the note is indicating? Because I think it's clearly stated there is weakness in the refining and petchem business.
Yeah, so I think it's turning out to be a Reliance day. But no, see, what they say is that, in case some of the core business does not improve, EPS downgrades will come in. So I'll talk about it, and then I'll also talk to Samit, because he tracks this company very closely and he might be able to give a better perspective on what's happening. But what is JPMorgan saying? First of all, they're saying that the refining and petchem, which is basically the core business of the company, there is where they see weakness is persisting. And basically they see that there could be large downside risks if GRMs and oil prices do not recover significantly. Now, the amount that they have said is a 15% downside risk if to the FY20 earnings if they do not improve. And GRMs, according to them, probably might improve in the second half of the year. But petchem business is unlikely to reverse for the company, and that is something that could wane on the company. Even lower oil prices is something that could impact. One of the reasons they feel that a reversal could come in, and that is Jio. Now they're saying if Jio takes anywhere between a 12 to 20% tariff increase, that could offset the weakness in the core business. But at this point of time, they see no signs of tariff improving anytime higher for Jio. Now, couple of things is that they are watching out for in Reliance. First of all, they're saying that they are watching out for the e-commerce launch, which could be a potential catalyst, and these are the important factors. Any kind of changes in the regulatory environment for the e-commerce landscape, that could be positive for Reliance. Any kind of potential stake sales in two businesses. First of all, the core business, that is the oil and gas business, or any kind of post stakes in Jio, that could be a positive. And Jio tariff hike, if happens, could be something that they are watching out for. On the balance sheet, what they've said is that they had actually, divested or carved out a new company, and that was an InvIT transaction for Jio fiber asset, and that should increase the balance sheet flexibility because the debt also goes out. But what they're saying is they do not see any kind of pickup in spending in Jio and e-commerce. So basically they're questioning the core business, and if that does not improve, a 15% EPS downgrade is something that could potentially come in. So Sumit, you also read this note. How much of this is known by the market? How much is new? And what do you make of this note?
So the GRM has been weak right from the start of calendar year 2019. So that is one known factor. But if you see the share price of the company, that has still not factored in, because if you see the gross refining margin, they have still remained low at close to $3.9 to $4 per barrel, which is a very low number, and I guess in fact it is the lowest in the last 7 years. So the share price is currently not factoring this lower gross refining margin, and JPMorgan has rightly pointed out that if this gross refining margin continue to remain weak, there could be an earnings downside that could come in for Reliance Industries. Along with that, because of this lower oil prices, the petchem spreads have also remained weak for Reliance Industries. So that is the another key point that JPMorgan has mentioned in its note. Now remember, this petchem business and the refining business are the cash cows for Reliance Industries. So if there's some earnings weakness coming in for both these companies, then it might impact the company's overall consolidated books, because these are the cash cows and they have been generating cash, and the company has been using this cash for various capital expenditures of its retail and the Jio business. So that is one bigger concern that is there on the street. And for the Jio business, if you see the divestment path that the company has mentioned, now despite this divestment in FY19, the company's debt was higher. So it would be actually interesting to see how the company divests its stake in the InvIT asset. Along with that, if there's some stake sale that is coming in the core refining and the petchem business and the Jio business, so how does the company bring down that debt? That will be interesting to watch out for, because if you see the capex cycle of the company, that has still not come off, because they have been continuously spending a lot of money on Reliance Jio. For example, if you see in the fourth quarter, the company had a capex of close to 21,000 crore rupees only for Jio. Now the total industry capex, that is including Bharti Airtel and Vodafone Idea, their capex is only 6,000 crore rupees, and Reliance Jio is spending nearly 21,000 crore rupees in just one quarter. So this capex has to come down for Reliance Industries. So that is right.
Can they raise tariffs, because they're saying that 12 to 20%?
No, I don't think so. There won't be any tariff hike, because in the fourth quarter meet, the company had clearly said that they're not looking for any tariff hikes, and they're happy what that current tariffs are, because their aim is to add more subscribers, and they're getting subscribers at this tariff, so they won't be looking to hike tariffs going forward.
Yeah, go ahead.
Just wanted to mention, so deleveraging is one of the trigger going ahead for this company. Focus has shifted to telecom, and there were reports indicating, you highlighted petchem has been the cash cow for years, that Saudi Aramco could pick up stake in their petchem business. So when the outlook for refining and petchem is looking weak, what are the chances that they would sell stake in the petchem business in order to deleverage the debt which is increasing on the telecom side?
So the chances of deleveraging when it comes to the refining and petchem business looks weak, because Saudi Aramco has already invested with the other three oil marketing companies, that is the state-owned oil marketing companies, in one large refinery project that is yet to come up. So they have already invested there. So buying another stake in Reliance Industries, the chances looks weak. But then when it comes to the Jio business and the infrastructure in that they have created for the tower and the fiber asset, that could happen anytime soon. That's what the street is expecting, and that could be a key trigger point for Reliance Industries, because the funds that come in from the stake sale will be used by the company to reduce that debt, and that is one of the key concern that the street currently has when it comes to Reliance Industries.
What's
There's
the
increasing
total debt
debt
right now in the
close to 2,70,000 crore rupees.
Is the street concerned about this debt? Because,
Yes.
Everywhere, people are hammering stocks with high debt and they're concerned. But that never seems to be the case with Reliance, because people think that Reliance
the reason why it's not happening is because people are expecting this deal to come in soon, and that will...
Which deal? The Saudi Aramco deal or the
Saudi Aramco, Jio's deal.
Jio deal.
Jio InvIT deal or the Jio stake sale deal. Any deal related to the telecom business is expected to come in, because of which the debt would come down. And if you see the leverage ratio, that has still remained stable for Reliance Industries in FY19, despite the fact that debt was higher. And that's the reason the street is still not worried about that. But if the petchem and the refining business earnings come in weak, this leverage ratio would obviously go up for Reliance Industries if they do not do any divestment and reduce that debt.
Also, the other chatter has been about unlocking value by demerging all these businesses.
So they have already unlocked that value. Now they have to sell that asset, though. They'll have to wait for that.
That's the concern, Navneet. I think the market rallied while we spoke about in the trade setup that mid caps have not actually moved, and the move, and we had also pointed out, was solely on account of 4 or 5 companies.
That's right.
And Reliance,
it's been a polarized rally.
If Reliance was the one that actually led the Nifty to new highs, and if there are concerns there, the market should be really worried, because the broader markets is not performing. Only I think TCS is the one that's now propelling the market higher, and there was Reliance, TCS, and the HDFC twins.
HDFC twins for the longest have been supporting the markets. I just want to bring it a data point for broader markets. For every trading day of this month, the market breadth has been in favor of the decline. So clearly, Nifty could be underperforming, or last week it was down 0.5%. But if one were to look at the performance of the broader markets, it has been clearly underperforming the benchmark indices. And what Darshan you've been highlighting, I think it's just the big 4 or 5 stocks which have led to the level where Nifty is right now.
FNO stocks are the most traded. Now on Friday, if 165 of the 197 stocks that are in the FNO, they ended with negative bias, you can see that there is weakness, and you saw the big drop that came.
Yeah, and I think we'll have lesser stocks going in for into July series for FNO, as 40-45 stocks will come out. Soumya, thanks a lot for joining us and taking us through that interesting piece with regard to Reliance Infra and also Reliance Industries. But moving ahead, specialty chemical makers have been making the most of a sharp bump in demand, and that's reflecting in the earnings and stock prices of the big players like SRF, Deepak Nitrite, Vinati Organics and Aarti Industries. But Yash Upadhyay has done some more digging to find out that the chair is just not limited to these 4 players. Yash, let's start with the selection criteria that you have chosen with regard to this analysis.
So Navneet, what we've done is that we've essentially eliminated these 4 companies, and we've considered all those companies who have a market cap of more than 2,000 crore rupees. Their revenue growth over the last 5 years on a compounded annual growth rate has been more than 10%, and a return on equity of 20% and higher for these names. So with that out of the way, let's try and take a look at which are the individual companies, what do they do, how has their historical performance been in terms of financials, and what the brokerages are saying. I'll start first with Alkyl Amines as the is the biggest global supplier, one of the biggest global suppliers of amines and amine derivatives, is the largest manufacturer of ethyl amines in the country. Over the last 5 years, the company's revenues have grown from about 446 crores to 846, so it's nearly doubled in the last 5 years period. Net profit too has gone from 43 crores to 84 crores, so strong growth both on the top line as well as on the bottom line front. Almost a 14% CAGR growth is what we have seen in their revenues over the last 5-year period. Similarly, very healthy return ratios as well. Return on equity of more than 20%, 25%. Debt to equity ratio is just 0.4 times, and you'll be surprised to see that this is the highest level of all the other companies that would feature in this list going forward. This being the strong growth in demand from the pharma and the agrochemical space, which are some of the industries which it supplies to, and that has managed to help the company grow its revenues at such a pace. But some of the key concerns that the brokerages highlight, and that includes the likes that their margins bump up. That is only expected to come after the expansion. So they are expanding their capacity. They have outlined 250 crore rupees over the next 2 years, and a lot of it is riding on the commencement of their new facilities. Any delay with respect to the coming up of their new capacity, that would be a big negative for the company. Moving forward, Fine Organics, it just got listed last year. It was one of the top performing IPOs of last year, gave spectacular returns. It's the largest manufacturer of oleochemical based additives in the country. Its revenues too have grown at a significant pace. It's gone from the levels of about 567 crores to 1060 crores. Net profit too has gone from 62 to 136 crores. So a strong growth both on its top line as well as on the bottom line front. If you take a look at the CAGR revenue growth over the last 5 years, it stands close to about 12 or 13 odd percent. On the return side, again, 30.2% return on equity, return on asset of 22%, and it's virtually debt free. So 0.4 times is what the debt to equity ratio stands for the company. However, what are the key concerns that the brokerages are highlighting? And that includes their raw material prices. So it's the biggest component in their total expense, accounts for almost 63% of its revenues. Any disruption with respect to sourcing it, be it the change in the policies or production shut down by any of the players in China, that would be a big negative for the company and would hit their margins considerably. Also, the strong growth that has come on the back of their 4 facilities that they have, and they are planning to ramp it up and almost double it over the next 2 years. So most of that growth would likely come after their new facilities come on stream as well. Moving forward, let's also take a look at Advanced Enzymes. It's the largest manufacturer of enzymes in India. It's used in nutrition-based industries. As far as their financials are concerned, they have gone from the levels of almost 239 crores to 420 crores. The net profit too has gone from 20 crore rupees in FY14 to 116 crore rupees. Now, this on the other hand, what are the concerns that the brokerages are highlighting as far as Advanced Enzyme is concerned? And again, it's key to note that it has been gaining almost a bulk or almost a fourth of its revenues from the large clients that it has both in the United States as well as India. It's into a niche business. Its margins are very high, but the dependency on the large clients, that is something which is a key concern that the brokerages are highlighting as far as Advanced Enzyme is concerned. And lastly, moving on to Himadri Specialty Chemicals, it's the largest and the fully integrated specialty carbon maker. It gives spectacular returns in calendar year 2018 on the back of strong demand in its end user industries. Its revenues went from the levels of 1,363 crores to 2,376 crores. Net profit too saw a big bump up from 80 crores in FY17 to 242 crores. Again, on the back of strong demand from the graphite electrode makers, aluminum industry, as well as the tire makers. It has also done fantastically well as far as the return ratios are concerned. Close to 20% on the return on equity, 12% on return on assets, and again 0.3 times is the debt to equity. So the company is virtually debt free. What are the key concerns that the brokerage is highlighting? Is the weakness in the end user industries. I mentioned its biggest end users are the likes of the tire makers, aluminum industries, and graphite electrode makers. So there has been some amount of disruption over the last 1 year period. But that apart, the company has been undertaking a lot of expansion as well as debottlenecking of its existing capacity. Any delay with respect to that also would be something that the street would not like. So all of that put together, these are the companies that you need to watch out for, apart from the likes of Deepak Nitrite, Vinati Organics, SRF.
Okay, Yash, thanks so much for that. Certainly, chemicals is something, and I need to tell you that. So a couple of people yesterday, after reading the copy, had actually indicated to me that it was a good copy, and they started asking more questions on that. So certainly, it's a good story, and you can read it on our website, bloombergquint.com. But that's all we have on First Word today. But there's lots more lined up. On Indian Open, we discuss markets and macro with Ajay Srivastava of Dimension Corporate Finance. Consumer durable makers are facing a slowdown. We talked to Sunil D'Souza of Whirlpool and understand the impact of dry weather condition on sugarcane production from Abneesh Verma of ISMA. But after this break, a full tilt towards the day's trade.